To hire drivers, you've got to work fast and smart. Did you know Driver Pulse, a driver-facing mobile app from 10th Street, is 2 to 3 times more effective than texting and 4 to 5 times more effective than email at getting drivers to respond? Driver Pulse is the largest source of free driver applications in trucking, downloaded by almost 2 million drivers to find jobs, complete training, and communicate with carriers. Companies find who they're looking for, and drivers find their homes with Driver Pulse from 10th Street. A name you trust. That's 10street.com, TEN street.com.
Welcome back to another edition of Check Call. Today we're covering the June market update with our favorite David Spencer. Don't forget to subscribe to Check Call, the newsletter, on FreightWaves.com if you haven't already. Before we dive into our guest interview, there's some news in the world that you should check out. El Paso, Texas-based Mustang Express has been acquired by Online Transport, Inc., a truckload carrier with more than 550 power units and 600 employees. Mustang Express is an over-the-road truckload team-based operation with 2 drivers in the tractor at all times. Mustang Express fleets consist of 65 drivers that primarily operate on the El Paso to Midwest corridor, Online Transport said on LinkedIn. Mustang Express's fleet consists of 65 drivers that primarily operate on the El Paso to Midwest corridor. The strategic acquisition will immediately double online transport footprint in El Paso. Mustang Express's terminals are located about 30 minutes from the Bridge of America's point of entry along the U.S.-Mexico border. Online Transport, founded in 2000, is based in Greenfield, Indiana, with 10 terminals across the country. The company provides over-the-road transportation services ranging from bulk liquid, flatbed, refrigerated, and dry van, as well as a brokerage and warehouse distribution services. This week's Sonar chart of the show is the outbound tender market share month-over-month change. Houston came in strong as the market seeing the most increase at 10.6%, but it wasn't quite enough to break into the top 3 markets in the U.S. In a slightly less surprising note, Ontario, California, home of the ports of LA and Long Beach, dropped in some prime summer months. No doubt is directly related to the drop-off in West Coast port volume. Today we're joined by David Spencer, the Vice President of Market Intelligence at Arrive Logistics. Welcome back to our very favorite market expert. Welcome back, David.
Thank you very much, Mary. It's great to be back.
I am excited to get into this one today. June, it was originally it was the month that everyone was kind of going, we should hurry up and wait and see what June's going to do, because we all knew the first half of the year was going to be pretty quiet, but everybody's like, oh, we got to see what happens in June. So, David, what's happening in June? How are those spot rates going compared to previous months? Are they going up? Are they going down? We're running out of floor for those spot rates to hit, but we could find a new subfloor.
Yeah, no, it's a great question. We've seen actually a bit of a pickup in the spot market, and that's caused spot rates to pick up off the floor a little bit, and it's certainly something we think is really great for all the carriers out there who have been particularly starved of this freight and looking for these opportunities. But yeah, I think Road Check Week in the middle of May was really the catalyst to getting things started here, and things just picked up and continued here into the middle of June. We've seen really those those typical hot produce markets where we see these seasonal demand surges be the key areas where a lot of this activity is centered and focused. But, those definitely having an impact on the national averages as well.
So originally at the beginning of the summer, there was some talk that the produce season was a little more muted. There wasn't a whole lot happening, left a little something to be desired. Do you think that is still the same now that we've kind of gotten into the summer and into like a good harvest season? Or do you think that we still have, something to be desired there?
Yeah, one of the hottest areas of the country right now is California, and it's really largely due to what's going on with the produce market there and the demand as it relates to produce season, and really the big rains that washed away a lot of the crop yields happened early enough for these crops to be replanted and kind of just push back that California season a little bit. And we've certainly seen a pickup in activity there, especially over the last week or two here in early June. As we think about how long that's going to last, though, it's obviously short-lived, and we'll see how much volatility that creates in the market. But we've certainly seen tender rejections jumping more than I think we'd expect to see, especially from that baseline we were at out of the state of California.
I was going to say the other day I was looking at some different markets here, and I saw some like pretty big markets jump up to like 5% rejection, and I was like, is this the beginning of something not cool? Because over the past few months, those markets had been around like 2.5 to 3, and I mean 5%. That's a small jump, but it's a jump in the right direction. I'm not gonna lie.
Yeah, when reefer tender rejections out of the Southern California markets, LAX, Ontario are above 6 right now, and Fresno, as you get more into the valley, is up, really approaching 10% rejections. So that reefer activity, shippers are really starting to see some challenges on their contract reefer freight out of California. And on the van side of things right now, we're actually seeing Texas be kind of a hotspot, Dallas, Fort Worth. The Fort Worth market seeing a 365-day high on tender rejections. So definitely something to be mindful of. As we've seen capacity exit the market becomes more vulnerable to these seasonal demand surges. And I think this is a type of pattern we're expecting to see on a go-forward basis. It feels a lot like it did in 2019. We saw a lot of the same pressures in these markets cause some of the same volatility. When you get into these equilibrium markets, these seasonal demand surges have a big impact on contract service levels and spot rates.
All right, so before we jump into the fall, what could happen? That's many months away, but right now, what's kind of the state of capacity in that van market, that dry van market, particularly on the contract side? So we covered the spot rate side. What's kind of going on the contract side? Is it more of the same, or could there be a spike after the 4th of July?
Yeah, I think it's a great question, and we really were looking forward to what was going to happen this summer peak season to kind of get a feel for where we're at on the spot side of things. And the uptick in spot is what we expect to see from normal seasonality, just like we expect as we get into July to see the spot market cool down again in mid-July. And that's really the unfortunate reality for a lot of the participants. Hoping that this is a return of the spot market. I think it's going to be relatively short-lived. And as such, I think the closing of the gap between spot and contract rates this month, pretty significant double-digit closing coming from an increase in spot rates and a further decline in contract rates. I think we see it jump back up a little bit again next month, even though we continue to see downward pressure on contract rates. So unfortunately, I think this is just a short-lived little bout of normal seasonality, and we're going to continue to see, I guess, fortunately for shippers, I think downward pressure on contract rates for the foreseeable future. Even if we see these pockets of volatility pick up in the spot market, I think this is that floor we're talking about, where dredging along the bottom doesn't necessarily mean we don't see that pickup. It means that now, when we do see those pickups, we will see it return back down once those demand surges fall.
I kind of like it. It's like when you dredge the bottom of a lake or whatever, and you come up with, maybe some pocket watches, because everyone's putting pocket watches in a lake. But you find some of those, pieces of gold or the things that are actually like worth something from the bottom of the lake instead of just a giant pile of garbage. So I do appreciate that. That we're gonna have those blips, and hopefully it works out for carriers out there, because I know it's still a little expensive to run a run a trucking company at the moment. So here's hoping that contract rates can pull them through. I like that for them. So I guess we talked about a little bit about July, where July could see some of that demand, or that quick seasonality demand, fall off. Do you kind of think that the capacity will remain the same in July, or do you think that there will be some more seasonal demands that kind of pick up in July, maybe for back to school?
Yeah, as it relates to capacity, it's certainly interesting. It'll be interesting to see what this bout of spot market volatility does. In some cases, it may be a little bit of an injection of capital to help keep carriers afloat, and potentially prolong some of the revocations of authority or these carrier exits, and maybe even extend the cycle a little bit. So in some cases, some of this spot volatility, may be good in the short term, but be bad in the long term if it helps extend some of these cycles by preventing capacity from leaving. And as we think about where those next opportunities will come, July typically doesn't see a ton of that back to school freight. However, we think we are seeing some increases in import levels into the West Coast and stuff coming from overseas that we think will support some outbound demand from some of these particular areas like Southern California. I think we expect to stay warm to hot through the month of July as we see that back to school freight move into position. And then really not exactly sure what we're expecting from a retail import perspective yet. However, the National Retail Federation did come out and say that first half imports this year are down about 22% compared to where they were a year ago. And that's a big hit. Some of that's back to school and some of that is early retail freight as well. So we'll see, but I think it's really going to be those normal seasonal pushes, in the summer and in the Q4 where we're going to see the most volatility.
I guess even during the normal years, is back to school that much of like a peak for freight?
It can be regionally, right? Especially where that freight is coming in into the country from overseas, right? And so with the deal getting worked out with the longshoremen in the West Coast ports, I think that's a great sign for more freight to potentially be shifting to the West Coast, or at least less freight being diverted away from there, with shippers having more confidence now of that freight coming in. And I think as a result, we should expect to see California maintain a little bit of strength from a demand perspective, at least not fall off as much as it had, or at least to levels where it was at earlier here in the year.
So I guess what risk to shippers, if there is any, could happen or is present with some of these larger carriers if they start to, perform under less than ideal conditions?
Okay, so I think if we see bigger assets like 100 truck fleets or whatever go under, or Yellow and LTL fleet go under, I don't think it affects operating costs much. But what I do think happens is I think that you start to see like more challenges for shippers, and that have established relationships. And so it probably leads to more stability in revenue for carriers that can support or fill holes where these carriers are leaving them behind.
Okay, so trucking growth. We've just kind of touched on the carriers that, are surviving and keeping going. What do you think is the main reason for the growth that we've seen in the trucking sector?
Well, total employment has gone up for a few months here, but after some revisions to data earlier in the year, current employment is below where we were in January, right? So I think more than anything, it's probably more of a plateau than it is to say trucking employment continues to grow. You obviously also have the owner-operated capacity that had not been included in those numbers that, as those drivers become available to and take company jobs, they start to get counted in the trucking employment as well. And so, I think very much similar argument to how we're sort of saying spot rates have bottomed. I think we're probably at a point saying capacity or employment has peaked, and how quickly things come down, I think that is yet to be determined. But I would say we're certainly seeing the leading indicators and revocation data point to the expectation would be trucking employment would be to begin to fall, to fall in line with where current demand levels are.
So one of the big things that I think is going to be a late summer challenge is a lot of economic factors. So whether that's student loan repayments, I know that they are looking to get that in front of the Supreme Court and have a decision on that before the end of the summer. And, inflation is still something that everybody's dealing with. What impact do you see, if any, are these economic indicators going to have on freight demand?
Another great question. I think more than ever, well, first off, I'll point to consumer spending, and we've really seen a lot of continued strength in consumer spending out there. Certainly a pullback in goods spending, especially when you adjust for inflation. So some of that has led to a decline in overall freight demand, but a strong, healthy consumer, continues to be the storyline here, and the job market, the labor market overall, continues to have, relative strength as well. So those two factors, I think, are really important when you start to think about, okay, where are interest rates? What kind of decisions is the government going to make around student loan repayments? Because where we're starting from matters, right? And we're still in a position where the consumer has strength, and is still spending money, and so that's key, right? And then as it relates to freight demand, what we've seen is really ordering patterns for retailers in particular tends to follow consumer spending as well as current inventory levels. So a lot of that stuff has a long tail or a little bit of a lag between what we see between government activity and then eventually how it hits freight demand. So whatever happens this summer, I think is more likely an indicator of what we would expect to see, maybe in retail season in the fourth quarter, or even, how volumes might be trending next year when it comes time for inventory restocking in the first half of the year. So I don't think it's going to have a big impact on what we see for freight volumes this year here, but at least not until the fourth quarter when we're talking about consumer spending on holiday shopping stuff.
It always amazes me how far in advance retailers have to order to get things here. Like they're a year to 2 years out, and the ability to just predict and forecast like that still, I mean, I know it's a lot of computer systems, but I know that it's just very impressive to me that those retailers are so good at what they do. I mean, except those holding onto a lot of bloat, but that was a different time. But it still just very much amazes me that they're able to, order so far in advance and still have something coming in. Because to order something 2 years ago, I don't even remember what I ordered yesterday that came to my house, let alone 2 years in advance. So I'm always very impressed at retailers' abilities to do that.
Yeah, managing inventories is a really difficult job, and getting the inventory levels right is really difficult to do, and going from an over inventoried environment to a right size typically doesn't happen. You'll probably go from over inventories to under inventories, and be in a rush to kind of get those built back up. And certainly if we see greater spending as we get into the holiday season, that could be a trend, right? We could see retailers with short inventory, if they didn't backfill it, obviously scared of what the consumer situation was going to be, now have some sense of urgency to get those imports from the ports on the shelves, or at least to direct to the consumer a little more quickly. That type of urgency could also be a potential reason for additional volatility around the holidays this year.
I kind of like it. On that same lane or avenue, what is your hot prediction for July? Do you see spot markets shooting up? Do you see everything staying aggressively normal and the same? What's your hot take for July?
Well, hot take for July, really it's that we're going to see cooling, right? I definitely think what the volatility we're seeing today feels a lot like normal seasonality, and normal seasonality would tell us we would expect to see some of that die down as we get into the month of July, and that's really where our stance is today. We haven't seen anything that says this is a fundamental shift in supply and demand balance. The increase in rejection rates we've seen are in the regions we'd expect them to see. They look very similar from a shape and pattern perspective to past equilibrium markets such as 2019. And so, not a hot take, but in forecasting, sometimes you just got to stick to your guns and look at the past, because history does repeat itself.
All right, I like it. Your hot take is just double down on what you got going on currently.
Well, I told you my hot take about Q4. I think the risk, the upside risk, is that the consumer is, spends more or continues to spend in a very strong way, and we end up short inventory, and as a result, we are now seeing kind of a greater sense of urgency and demand out of the port cities, and that could create some volatility. But certainly too early to tell. I think we'd look to examples like an early Prime Day as a good sample size of what we'd expect from the consumer around the holidays, and potentially a foreshadowing for what that means for spot rate volatility.
Awesome. I can't wait to come back to this clip in November and see how it's working out for us. Um, Something else that is an equally hot take, if not a hotter take, you have gotten the broad spectrum of questions on this show, and we appreciate your willingness to go along with us. But today we're gonna get you another one. If you could invent a holiday, what would it be called, and how would people celebrate it?
Well, the right answer here is to come up with a holiday for my wife to get more time off or something like that. But the wrong answer and the one I want is like, dad's golfing holiday or something like that. We already got Father's Day, but like with Father's Day, you kind of like gotta like spend time with your kids, right? It's celebrating being a dad, but I'll go ahead and say a dad's golfing holiday or something like that, right?
I absolutely love that. A dad's golfing holiday. That would be a magical day. And of course it'd have to have like the best perfect weather, you know? All right. So if anyone wants to
Yep.
join you on the new dad's golfing holiday, or if they want to reach out about any updates on the market, where can they find you outside the show?
Yeah, first and foremost, arrivelogistics.com. All the content we create is accessible there, and my contact info as well. But direct email, arrive insights at arrivelogistics.com. That all comes to me. Happy to connect and to share any of our content or talk about anything from holidays to hot dogs being a sandwich, or cereal being a soup. All the fun questions Mary likes to ask. Also LinkedIn, active on LinkedIn, and it's a great place to connect with me as well. So thank you very much for the time, Mary, and for asking me fun questions every time.
Find Check All the Podcast anywhere you get your podcasts, like Apple Podcasts and Spotify. Don't forget to check out all the other incredible FreightWaves podcasts, such as Traxer Time and Truck Tech. Don't forget to subscribe to the newsletter on freightwaves.com/checkcall. See you on the internet.